All right, Mark here. And hello, everyone. Welcome to another Greenbridge Investing Market Analysis. Today is Friday. So we'll be going over Bitcoin, some of the major markets, and stocks that you'd like to see. I also had a great question from one of our members in the chat room that I'd like to go over. I think it'd be very helpful for people to know, especially for people that are not located in the US. So if you're new to Greenbridge, please make sure to check out our website at greenbridgeinvesting.com. There you'll find the ability to join as a free member where we have a chat room. We also have paid memberships where we send out trade signals and portfolio ideas and provide a lot of analysis each day in our active investor chat room. Okay, so if you'd like to check those out, again, greenbridgeinvesting.com. Also, if you like this channel and you like these videos, please press the like button. Okay, and make sure you subscribe so every time I do one of these, you can, you'll get a notification from YouTube and you can check it out. Now, as I'm going through this, please feel free to ask questions as I go along. That's the whole point of why I'm doing these live, is so that we can get questions and I can really cater this to what you're most interested in seeing. All right, so with that being said, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, straight to Bitcoin. So let's take a look at what we have here. Hey, Bella, great question, and we're going to spend some time on that answer today. Thanks for joining me. So let's begin here with Bitcoin, and let's talk about what's going on. So yesterday, there was the stock market sell-off. And if you tuned on any news organization or you go around to any news websites or blog posts, you're going to get just filled with nonsense. You're going to get filled with drama. And you're going to get stimulated to be fearful, right? That's what attracts attention, and that's all they're interested in monetizing, because that's what their business model is based on, not providing information that can be useful in decision making. That's not their function, and people need to understand that. All right, they provide entertainment. That's what they do, and they're very good at it. Now, for those of you that are not really interested in entertainment, in making decisions, that information will come from your charts. Okay, so let's first begin with Bitcoin. Again, we had this nasty candle, and what was the first thing we told everyone in the chat room? No reason to react. There's nothing to do here. Now, we had an aggressive swing trade that we were long from back here, and that got stopped out in this candle. But there was plenty of opportunity also for us to get out of it. We managed to sell 1/3 of that position at 10,200, which you all know about. So we only had 2/3 of the position left. And people asked us along the way, should we get out? What should we do here? And my answer would still be the same, even though now we have this information. My answer would be, we will let the market determine the outcome of the trade. We take ourselves out of the trade as much as possible. We had our stop set. We had our target set. Now, we knew it was an aggressive trade to begin with because of the location, and we were betting on that breakout and squeeze. The market did not deliver, and that's that. If you try to second guess and you try to get caught up in all this noise, then you're going to second guess a lot, and most of the time, it's not going to be the right decision. Now, this time we could have said, oh yeah, we got out early, and what a great decision that was. But a lot of times, it's not going to be. A lot of times you're going to be like, why did I get out? The market ran without me and I was in it and it never went to the stop and blah, blah, blah. Okay, and then there'll be these times when it goes to the stop. Now, stops are a very valuable thing. For those of you that get frustrated with them and, it's like, you know what, I'm just not going to use a stop anymore. That's the way, you're going to learn the hard way that's how you wipe out an account. Okay, stops actually save you money. Now, there'll be times when you get faked out, you get stopped out, and it turns around. That will happen. But it shouldn't be happening a lot. Okay? So what do? You wait for the next signal, and you get back in. And that's what takes me to where we are now with Bitcoin. Right now, we have this inside bar. Now, when I talk about these, everyone focuses on the inside bar. Oh, no, it's another buy signal, buy signal. But here's what you have to realize. The reason why I'm so confident, and the reason why I would even give this a chance, or consider this, especially since this is in the middle of a range, which is usually not the best place to take a position. The reason why I would even think about it is because the structure on the bigger picture has not changed. Okay, this low at 8,500 has not been taken out, not even close. All right, none of these lows have been taken out. Our key support hasn't been taken out. All right, which is 76.95, which I may have to update that a little bit, but still, we're not even close. So this thing is just a bullish consolidation. And in my opinion, which, you know, I don't hold on to any opinions, but based on the structure, which is the market telling me what to do, this market is still strong. So it doesn't really surprise me that we're getting the inside bar here. But what's more compelling about this, and like I wrote in the chat room earlier, is that this type of bearish candle will lure lots of bears, okay? Because they go on Twitter and they go on their 30-minute chart and their 5-minute chart, they see a signal and they all get short because, you know, they all think Bitcoin's going to 3,000 for whatever reason. And there's nothing in the structure that says that that's even a possibility right now. It's not a high probability, okay? So when all those bears are short and they're sitting there waiting for this thing to turn, meanwhile, their orders got absorbed and there's been some buying here, right, with today's green candle. If this high is taken out, which is 95.55, so you figure 95.75, maybe 96 even, almost back to where we got long the first time. That's probably going to cause short covering, right? Because now you have all these bears that are caught, and a market that's weak should not do this, okay? A market that's weak should take out yesterday's low is what it should do and keep going, okay? But we're hesitating instead. All right. Now, this doesn't mean that tomorrow, the next day, or next week that this can turn into a sell signal. It's possible. But if we get the buy signal, I'd rather give that a try, all right? And because this thing's not a short, not yet anyway. And if it was, we wouldn't short it. We would just step aside. So that's the thing with Bitcoin. Don't lose sight of the bigger picture structure. And again, we're facing another buy signal. Usually when you get like a sell-off like this and it's followed by a buy signal like right away, that means it's a fake out, most likely, okay? And all these people that are short are now caught, and they're going to be the buyers that push this thing back to the highs when they get margined out of their positions. That's how it works, okay? So that's Bitcoin. Now, you know, people like to throw a lot of opinions at me, and they think Bitcoin this and Bitcoin that and economy this, economy that. None of that matters because prices are driven by irrational behavior, not factors that we learn from the news. All right, so that's Bitcoin. I know I'm very long with those, but I think it's important to understand the perspective. And that's the point of these videos. So again, if you're new, please feel free to ask questions. Now, let's get into the stock market next, because the stock market's had a similar situation. Now, I'm going to begin here. I'm going to show that I like to represent the stock market with the NASDAQ 100 CFD, which is NSXUSD. It's the same thing as the Qs, basically, or the NASDAQ futures. It's the same thing. It's just the CFD version. Now, I've highlighted these higher lows all over the chart because that's a sign of strength. Now, you know, some people have been hesitant up at these highs, saying, you know, things like, I don't trust the market rallying and that. And that's fair, because the higher you go, the greater risk of retrace. And I talked about this on Wednesday. This is Thursday's candle, the red candle. On Wednesday, all we had was that green candle. And like I said, a turn can come out of nowhere. Okay? And we got this bearish candle pretty much out of nowhere. A chart is not going to tell you that this is coming. The market needs to prove something, right? So here's what we have. We had the red candle. Earlier today, we tried to recover a bit. As you can see, it gave it back, okay, with this current candle now, which is going to close in about 45 minutes. And we took out yesterday's low, all right, which is 95.85. That's not a good sign, okay? That's not a bullish sign. But this also does not qualify as a trend reversal either. And that's the mistake you cannot make. Some people... There's a whole range of mistakes that you could make in this situation. Some people start buying too early because they think it's a good pullback to buy. And that's not true because we don't have any major inflection points nearby. This is not a place to start buying. And the other thing is they want to rush into a short because they think that this is going to be the big dramatic pullback that everyone's waiting for and blah, blah, blah. And it's too early for that also. Keep in mind, there's also the possibility of doing nothing, right? That's also a choice that we all have. And a lot of times that's the right choice because the market needs to provide clarity. We don't force our ideas on the market. The market presents ideas to us, and then we evaluate the idea. So that means we need clarity. This is not exactly clear. All we have is we have a confirmation of bearish momentum by taking out yesterday's low, and we have a somewhat weak candle here. But anything can happen or anything can change between today and Sunday evening or Monday when these things open again, and this thing may be gapped higher. I don't know. All right, the chart's not going to tell us about that. All we know is we have proof that there's some bearish momentum in play. Okay, now how should we adjust? How is this information valuable to us? Well, you know, we've had quite a few stock positions. We've been talking about taking adjustments. We've also, all of our stock positions have been at 1% for this reason, because we don't know when this is going to unfold. And we don't know if this is going to continue to the, 8,500 or actually 8,600, whatever, mid 8,000s inflection point. We don't know if it's going to do that. But, if some stocks go to your stops, fine. That's the risk that we determined in advance, and that's the risk we accept, right? We let the market determine the outcome. Also, the other thing is there may be some stocks that are kind of not doing so great and are likely to go to the stop if this market just keeps going lower. And that's where you have to use your discretion. And I talked about this, and Michael actually had an interesting comment. He said a lot of times he'll use his discretion and it turns out to be wrong anyway. But it's, using discretion is not an easy thing. And the reason is, we're always facing a random environment, right? So it really needs to be a focus on risk. So whether the outcome is right or wrong, like maybe you got out early and then, you got out at the bottom and the market turns on you and you got faked out. It's not about that. It's about the risk. If you're not willing to accept further risk, then your decision is right if you get out, because you're like, I don't want to accept any more risk. Risk is the only thing we can control. There's nothing else we can control. So it's not about, you shouldn't feel bad if the market turns on you and you're like, why did I get out for? I got faked out. No, if you evaluated your risk and you said, I don't want, if this thing goes to the stop, I'm going to be really unhappy, or I really don't want, I don't want to deal with that. Okay, then get out. You can always get back in. Okay, just keep that in mind. So back to this thing, there's just nothing to do here. All right, except maybe lighten up on some stocks that you don't like. Maybe they're not performing well. We're going to have to take a look at Roku, because Roku is one of those on my radar. And that's what's going on there. So we have to see how this plays out next week, but we do have this bearish momentum continuation sign, and we'll have to just keep that in mind. But, it's not like we're selling off hard. All right, this is an indecisive candle. So that's the only real judgments we could make here. There's really nothing else. All right. Man, I'm talking a lot and I've only covered 2 markets. That's too long. All right, again, any questions, please let me know. All right, so now I want to take a look at gold, because gold there's been a lot of action in gold. All right, and if you have any stocks you'd like to see, please put them in the channel now, so I'll have them and then I can go through those. So gold has been in an interesting situation. Now you can see the trade on the chart, right? I put this trade here. We sent this out earlier in the week. I think this was Monday. After the podcast, we sent this out at 1703. And it reached its first target at 1725, which is great, okay? Because now we only have 2/3 the risk on. I always look into everything in terms of risk. So we had a position of 3 units. Now we only have 2 units. Great. Second target is 1765, right? Gold is now fooling around. So this situation, Andrew talked about this earlier, gold may provide another buy signal, similar to that Bitcoin one that we saw, that one Saturday at that 9610 area. It's very similar because we're at the range high and it's giving us an inside bar. This is tough to take because of the range high, but gold is in a structural position to break out. Okay, and if gold breaks out, 1850 probably is not that unreasonable because of the way this instrument trades. People are very emotional about gold, very bullish on gold. People ask about, is gold bearish, blah, blah, blah. Gold, there's nothing bearish about gold. So it's in a range. You break out of that range, there's probably going to be a pretty sharp squeeze. And it can come out for any reason, right? There's no reason to get wrapped up in fundamentals or why this, why that. All we know is the structure and the risk. So we'll have to see how this plays out. But this is a possibility for next week. Another, like Andrew referred to it as an alternative trade, an alternate trade, because we still have our gold position. So we may issue another one for those that missed the 1703 entry, and we may get a continuation pattern here, which we will be open to sharing. Okay, so that's gold. Let's see, Ricky, could you take a look at, sure, Starbucks, OTP. Okay, sure. All right, guys, thanks for sharing those stocks. So I'll take a look at those once I get through. I want to take a look at the euro here. Now, a lot of times I'll cover like oil and stuff and the DAX. If you'd like to see those, please let me know. Okay, hold on a second here. So I want to take a look at the DAX. I mean, oil's been pretty much the same story, right? So I don't have to. And I've spent all this time on these two markets, so I don't want to make this 2 hours long. You know what I'm saying? You know what I mean? All right, so let's take a quick look here at the euro, because Andrew's been talking a lot about this. Okay, and we've been watching the euro and the pound. They've had a nice move up. We had some nice Forex trades in the month of May, but we're not going to chase these things now, right? We caught a portion of this move, not in the euro, but in the pound, we caught the move, nice long move. And now we're getting the pullback, okay? This is what we want to see. This is great. But this is not, there's no reason to buy this. Now, who can tell me? Hey, no problem, Joe. No, who can tell me why I would not buy this, even though this is a pullback in a strong market? I mean, those are two pretty good, pieces of information. But why can't I buy this? Who can tell me? That's my interactive portion of the session here. So while it takes a little while for you guys to get that question, again, we had this little failed high situation, and it is a strong market. We just need to wait for this thing to find its support, which is most likely going to be around here somewhere. Okay, this old high, which is the 1150 area. Right, DJ? Well, no, DJ got it. There's no setup. That's the problem, right? This we don't buy on just a red candle like this. Even if we have a level. Okay, right, Ankit, no confirmations. Right. There's no setup, there's no confirmation, there's just no reason. And a very common mistake that people make is they'll just step into it saying, oh, well, it's a pullback in a strong market. It'll probably turn around, but there's no evidence. The market never showed any sign of turning. This thing could pull all the way back. We don't know, right? So you don't want to make that mistake. It's best to wait. Now, some people may argue and say, oh, but if you wait for that, by the time it turns, you give up 80 pips. Well, who cares? I'd rather miss those 80 pips while it finds its bottom than get caught and lose like 150 pips because I got in too early. Okay? Because if I miss those 80 pips and the thing has a 200 pip move, I'm going to have a positive outcome. That's all I'm interested in. I don't care about missing this or missing that. Opportunities are unlimited in these markets. You just have to know how to recognize them and how to manage your risk around them. So that's what we're waiting for with the euro. Definitely like it long. Some people are going to be calling it a short and this and that. And you have to watch out. Whenever you come across someone's analysis and you're saying, they have some sort of dramatic analysis, always make sure to check the time frame. If they're watching like a 30-minute chart or a 1-hour chart, or it's just meaningless information, it's not going to help for swing trades, at least not for our strategy. All right, for a day trade, fine. But a lot of times the mistake is they call a swing trade target on a day trade chart, meaning, oh, the euro is going to go back to 109. Okay, they're looking at this on a 30-minute chart. That's a mistake, because that's just you're mixing the magnitudes, and it doesn't work that way. So right now, waiting for some sort of reversal pattern or something, and then we'll be all for going along the euro when the setup appears. And that could occur next week, okay, early next week possibly. So we'll be watching out for that. So that's the euro. All right, so that's pretty much ones I want to go over. And one stock that I want to go over, I just want to cover Roku real quick, because Roku is another stock that we've mentioned in the chat room, and we have a trade in. And Roku, I've been watching it carefully because of the market, its price action relative to the market. One thing that people need to understand about stocks is they typically follow the broader market. Okay, some stocks more than others. It's not equal. So Roku is a tech stock. Obviously, it follows the NASDAQ to a point. Now, when it does its own thing, that's how we gauge relative strength or relative weakness. Now, the market sold off dramatically yesterday, okay? And Roku delivered a red candle, but the low of that candle was 106 and a quarter, right? But a few days earlier, or like a week earlier, the market was pushing highs and Roku was testing 100, right? That's relative weakness. Now the market is pulling back and Roku is not testing those lows. That's relative strength so far. So I like the way it's holding up. Now, of course, if the market continues to pull back dramatically, this thing will probably have no choice but to take out that low. So that's something to keep in mind, and that's where you have to use your discretion. So, like for example, I like Roku. I'm just gonna let the market determine the outcome, and I'm gonna give it a chance because right now it's still showing relative strength. But I am taking a risk, okay? And I'm risking that the entire market the entire market holds and turns, and this thing can benefit from a market that's working its way higher, retracing higher. That's and if I'm wrong, I'm going to get stopped out. Okay, that's just the way it is. So today's low on this thing is 105.41, and we're right now at 107.53. Okay, so that's pretty good. Keep in mind this 108 level is the key support for Roku. And you notice price has been gyrating around that level, which is appropriate price behavior for such a level. All right, so all I need is the market to cooperate with me here. And I may get that, I may not. There's no way to know for sure. And that's what taking a risk is all about. Now, my size is appropriate. If I get stopped out, well, that's it. But I've been sized, at 1%. And that's why we do that. All right, so my point is Roku is still in a healthy position. We just have to hold it and see how it goes for those of you that are still in Roku. All right, so let me get into these other stocks here that people are asking for because, I talk a lot and next thing you know, it's going to be like 4:30 and I'm still going to be talking. So let's see. Let's start with Starbucks. Okay, so SBUX. Yeah, I know Andrew's been a big fan of this one. At least a while back. Now, okay, Starbucks is going to be sensitive to certain types of information, especially with China and stuff like that. But here's the thing. So it sold off, okay, with that dramatic move that we had, especially yesterday. Starbucks was selling off previously, obviously after this peak. I mean, look at these gaps, right? Look at these gaps. So you had that, but it stopped at this support. All right, right here, which is what is that? 71.26 area. So we could basically say, what's this low over here? 70. So we can use the whole number as a reference point, right? And say basically that 70 area. Not only has it stopped, but it gapped today, and it's giving us this pin bar. So in light of how the market is behaving right now, this is another stock that's acting relatively strong at the moment. Because with the market giving back its bullish movement today, this thing should be on its lows, okay? But it's not. Instead, it's giving you a reversal pin bar. This is also an inside bar. So you have some room. This could have been just some over-dramatized overreaction, this bearish movement, and this thing is in a position to go higher. So I like Starbucks as far as reward risk and strength. I mean, you have some potential to go back up at least, let's see, what is this high? 83.50, 83.60. So testing $80 is not unreasonable, especially it could do it in a couple of days since it only took a couple of days for this thing to test that 70 low. All right, obviously this stock's a little wild. That's a little wild movement there. But, in terms of strength or weakness, I like it as strength. Now, that will change if we close below 70. So if next week this thing's pushing 68, 66, 65, that's a bearish sign, especially if it closes below 70. So something to keep in mind there. The way to get involved in something like this, if you don't have any Starbucks, is you have to size appropriately. You don't want to be sitting there buying hundreds of shares if you can't afford, if you're margining out your account because, you don't have enough money to hold on to those shares. All right. You mind having a quick look at NCL? Sure, sure. Okay, no problem. All right, so that's Starbucks. And again, I had that great question from Bella that I want to go over. He had a great question about the relationship with the euro and gold and everything else, Bitcoin. I want to make sure I get to that too. So let's take a look at OTP. All right, OTP. Now this is on the Frankfurt Stock Exchange. Okay, so this is German. Let's take a look. OTP. All right, so it looks like it's a bank. Now I'm not familiar with OTP. It's the first time I'm looking at it. So let's see what we have here. All right, so I don't like that. This very limited price action. I mean, that could be because maybe TradingView just doesn't get quality data from that exchange. It's possible. Now, just going back though, we can get a sense of price action. So it was rallying, right, up to this, what is these highs here, around this 45, 46 area, and it had that dramatic pullback. Okay, so I see what's going on here. Now, obviously, in more recent times, it had a higher low, and it's trying to develop this reversal situation. This is a risky situation, and the reason why is, yeah, your most recent momentum is bullish. You have higher lows, you have higher highs. In fact, this is a pretty nicely formed Elliott wave formation. You have 1, 2, 3. This is 4. So you're likely to get a wave 5 higher into this old support and new resistance area, which dates back, almost a year. And that's what prices is that? It's like that 36 and a quarter area. I mean, that's what you're kind of looking at in terms of a reasonable potential. Can it go higher? It's possible. But what you're fighting against, though, that resistance, if the price gets stuck there, then this structure that you're looking at here can easily become a lower high. Now, that's not a judgment that you could make now. Like, we can sit here and say, oh, yeah, it's a lower high. But it can change, right? It's not a lower high until it establishes the peak and it starts producing bearish candles. And we don't have that yet. So you have to go with the most recent momentum, which is bullish, but you have to keep an eye on that resistance area because that's where things can change. Okay, so if you're in it, that's what you want to watch for. If it pushes right through, like it's not even there, great. If you get bearish reversal candles in that area, then watch out because that can be, if it establishes as a lower high, then that's showing a sign of weakness. And, perhaps you want to lighten up or just get out of it so you don't have to take a risk in something like that. There's so many better looking charts out there. Okay, so good question on that. I think if I answered that question, Bella. All right, so let's take a look here at next one I have is NCLH. Okay, I believe that's Norwegian. NCLH. This is one of those. This is a herd mentality stock. I believe we had this question. Was it on the podcast? We had this question recently, or was it maybe it was in one of my previous videos? Because I remember we were looking at this. And so here's the thing. Let's open up this chart a bit here. The other day, this may have been a question in my session, or because I remember during the podcast we looked at this thing and it was like here, up here at this peak, okay, and the high there is 26.90. One of the comments, if you go back and listen, I said this is a herd mentality stock, meaning all the people who don't know any better are buying this thing here now, right? Because it's obvious. Because like, oh, everyone's going back on cruises and all that kind of stuff and blah, 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 and this and that. Okay, so when it's obvious like that, it's usually not a good time to get in if you're not in from these lows. Okay, now, so it pulled back obviously on the dramatic news. Of course it would, because again, who do you have buying up here? Everyone that uses Robinhood. All right, if you use Robinhood, no offense if you use Robinhood, but typically people who use Robinhood are not very well informed. That's why they're using Robinhood. And, that's who gets caught in these things. Right. And you know what, Ricky? That's right, because those are herd mentality. That's a herd mentality idea as well. That's why it's very similar to like day trading penny stocks where they all pile in at the same time and it goes vertical. Anything that goes vertical, you have to avoid because that's the herd mentality. All right. You want to wait for the pullback. So now that brings us to where we are now. This thing pulled back. And I mean, if you're going to get involved in something like this, okay, now that you got a lot of the herd out, remember, they're banging out their shares to people that are informed. That's typically the process. And if you want to find the more ideal locations for, to take risk that the herd, again, is not aware of, you have to look at old inflection points. And that's what these old peaks right here. Okay, 1748, 1750. That's an old resistance, which is now acting as a new support. And look at the price action between yesterday and today. Okay, it basically reversed off that area, and you have this gap today. So with that being said, your risk can be defined around those lows, maybe that 1750, maybe 17 even low. And if you're going to buy something like this, I mean, you still have some time. If you're going to buy something like this today, this is not a bad location for a long, because typically you get a higher low. It should lead to at least a test of the high, if not a higher high. Again, this also fits into the Elliott wave configuration, although it's a little elongated. You have like a 1, 2, pull back. This is 3, top of 3. This is your 4. 4 should not overlap 1. So if we're going to count our 1 from here, I mean, there's a little bit of overlap going back here. But again, that rule is not, you can't be very exact with that rule either. So I would still say, okay, you have that Elliott wave configuration. You can also count from here. Elliott wave is very subjective, just something to keep in mind. But you do have a potential higher low, and testing the high is within reason. And this high again is what? 26.90. And you're fooling around right now today at like $20. So just keep in mind who you're competing with in this stock, what you're dealing with. When you're dealing with the herd mentality and day traders, because it's a pretty inexpensive stock, you're going to get a lot of these dramatic movements, okay, quickly. So definitely a position of strength. If you're going to get involved in it, now would be a better time than up here. Does that make sense? So, you have to decide your risk and how comfortable you are with that. And you have to decide if, you can deal with if it pulls back again to that old support. I mean, me personally, if I was going to trade something like this, I would probably wait and see if it can test that support again. If not, I just let it go. Because, again, there's so many other stocks out there that offer more reliable setups. But, but overall, it's not in a bad location. And testing that 28 or 26 high is not unreasonable over the next week. So that's what I have to say about that one. All right, let's take a look here at PSTI. Okay, PSTI and then work, and then I want to go over Bella's question. Let's see, how am I doing with time here? Okay, so PSTI. All right. Now this is one I know Andrew's talked about this one. And this is one of those biotech stocks. And as you can see, the drama, back in April and all that stuff. Okay, so here's the situation. Good location for a long. You have this outside bar that developed the other day and has gone nowhere. You now have inside bars that are developing. So as long as that structure holds, what you want to see is, the ideal thing to see would be to take out the high of that outside bar, which is 90s, what is that, basically $8. You need to clear $8. Now, if you can clear it, $12 is within reason, but you also have to ask yourself, why was this thing behaving like this, a month or a month and a half ago? That's because it was driven on all that news. So obviously, to get something like that going again, you're going to need a similar catalyst. If this thing if they're not really doing what they're supposed to be doing, or, someone else has beaten them to it, or whatever it is, then you're not likely to get that catalyst, and then expecting 12, it becomes unreasonable. So can you get a move maybe to maybe halfway there, maybe 10? That's a little more reasonable, and that's probably without, a very strong catalyst. So that's the way you have to look at it. But in terms of just technical structure, I like the location, because that's like a nice 50% retracement there. And that's a much better location than buying the highs. Your risk is nicely defined also by that $6.88 low. You could basically, a stop could be around $6. You have to give it some room. You can't put it at like $6.85 and expect that to be reasonable. All right. If it clears that, if it takes that out and clears it, then you should probably just stay away. Because again, these stocks are also very news driven. and they're hot for the moment, and then they're not for like a year, similar to the cannabis stocks. Okay, so just something to keep in mind there. But technical location and structure, yeah, it's bullish. Okay, you just need to clear that level, and that thing has some potential in it. So that's PSTI. Let's take a look at work real quick, and that's, I believe work is Slack. I believe that's the Slack app. Yeah, right, Slack. So obviously they had this gap in there is most likely an earnings report, I'm guessing, because I don't follow this stock at all. But usually when they miss, you get a gap. Okay, so that's a pretty nasty gap too. As far as structure on this thing, you're now testing this old resistance, new support. Okay, and that's these levels here. You can see it very clear on the chart. $30, that $30 area. In fact, see, I can draw a line, right? I draw a line there on that. See that level right there? That's an old resistance, new support, and you have a pin bar now, okay, which is nice pin bar. So this is another attractive location for a long in terms of reward risk. Your potential reward would be at least halfway through that gap. Stocks tend to want to close their gaps, so you have some potential in there, all right, some potential profit, and your risk is pretty limited. As far as risk goes, you can go by like this here, 28.72. So you figure 28.50, maybe 28 even. All right, so if you're buying this thing at like $31 or $30, you're looking at maybe $2 or $3 worth of risk to try to make maybe $3 to $5 in it. And that's the short term, and that's, I look at all these as swing trades. Keep that in mind. I'm not looking at these as investments. I'm only interested in what their potential is over the next week or two. I'm not looking months out. Just something to keep in mind. So yeah, I like it. I like it as a long. Okay, I like the location. I like there's a setup. There's a little setup in there. Now something like this, the more aggressive thing you can do is, buy it before the close today, which you have like 15 minutes, and hope that the pin bar is taken out, the high of the pin bar is taken out on Monday. That's aggressive because we don't have that in place yet. Or you could wait till Monday and get confirmation that the high is taken out, which is 31.25 basically, and then buy it. That's a little more conservative because now you have evidence of buyers. This thing can gap lower on Monday if the market gaps lower. So that's why it's more aggressive to step into it now. All right, just keep that in mind. Another thing you could do to compensate for that is you can go in with smaller size. So let's say, you wanted to buy 100 shares of this. So you want to get into some today, you buy 25 shares. And then maybe you buy the rest on Monday. Something like that, just to give you some ideas. I'm not giving you official trade ideas here. We send those out by text and by email for those of you that are not new. So for those of you that are new to Greenbridge, we send out our trade ideas by text and by email. Okay, and we were thinking about possible Bitcoin for today. So anyway, all right, so that's that. Now, those are the stocks. Thank you everyone for asking me. Those are great stock questions. I want to address Bella's question. Bella asked a great question in the chat room about the relationship with the euro and gold and the dollar, and why gold and the euro. Okay, well, MPC, all right, I'll do it real quick, okay, real quick, and then I want to address that question because, I'll be here too long. Okay, so, Marathon Petroleum. This is going to be following oil, obviously. Nice pullback recently. Good location, but no setup, okay? So you're right now, you have this old resistance here at 34.21, basically 34.25, and you're fooling around there. But this is not a time to buy, all right? Not yet. In fact, we were considering oil for a long, but obviously it has some more room to pull back, and there's no setup. That's the key thing, all right? You could say, oh, but there's an inside bar. Yeah, but these candles aren't that great. I just don't like the way this thing looks. Plus, you have this little minor resistance here, and oil's been fooling around at those relentless highs. And I don't like when oil does stuff like that. So if oil pulls back, you're going to get better prices on this. I would wait, or at least maybe you get like a little mini double bottom here or something. Like maybe the next candle is red again, and maybe the following candle is green. Maybe something like that, okay? Or maybe a failed low would be more ideal than this situation here. I mean, it started out pretty good, and again, it looks like you're going to get that inside bar. If you take it, that's an aggressive trade, in my opinion. It's aggressive, all right, because again, this is going to be more dependent on oil. So just something to keep in mind. All right, so that's Marathon Petroleum. Again, this is a very popular one with Andrew, especially for the long term. He loves this one long term. I believe they pay a very good dividend, and he knows all about their, all about their business, situation and all the things that they own and all that other stuff. Okay, I don't pay any attention to that, but it is a good long term hold as well. So any kind of pullback obviously would be a buying opportunity for those that are interested in the long term. But like I said, for short term, I think it has some more room to play with here as far as pullback. All right, so let me get into Bella's question. Now, Bella asked a question about gold, okay? And hey, Bella, if you're here, maybe you could type that question in here in this chat so people can read exactly what your question was. So I'm gonna pull up, what I'm gonna do is I'm gonna pull up first gold against the euro, which I believe is what? Is it EUR? GLD, is that the symbol? No, I need to get a symbol of gold against euros. Oh no, I'm sorry, XAU. What am I thinking? So XAU EUR, right? Is that it? Let me see. I'll find it. Okay. I mean, I don't look at gold in terms of, yeah, there it is. I don't look at gold in terms of euro. So here's gold. Okay, in terms of euros. Now, Bella's question was, how would you make decisions based on this type of chart if we're making decisions based on gold against the dollar? Okay, when we send out our gold trade, we had a decent gold trade which I showed earlier. It reached its first target. Okay, and Bella was saying that gold against the dollar is different. The structure is different than gold against the euro. And so here's gold against the euro. Okay, no problem. And let's take a quick look, and I'll come back to this chart, but let's take a quick look at gold against the dollar so we can compare them. All right, so here is gold against the dollar. All right, that's gold against the dollar, which we can see is basically in a range. I mean, so when we're defining these things, let's start with gold against the dollar. All right, so and there's Bella's question. Gold or as against the euro, it often shows a different structure on the chart compared to the USD. Okay, so that's the gist of his question. So what we're looking at, right? So let's start with gold against the dollar. Here we have a range. Okay, that's the range low, and this is the range high. Okay, and now we're interested in the range low or stuff that happens near the range highs if it breaks out, right? And that's gold against the dollar. Now, when we go back to the other chart here, which was the euro, gold against the euro, obviously it's a different structure. We don't have that nicely defined range, do we? It's a little bit more all over the place. In fact, it looked more bearish recently, right? That price action was more bearish from this high, from what is this high here? 1633 high to the 1477 low. Now, so here's my answer to that. You have to understand that no matter what you're looking at, right? Gold against the euro, gold against the dollar, each market obviously is going to have its own, like the euro is going to have its own key drivers that, that drive this thing against gold. And this is where technical analysis is really the factor here that will help you get through this, because instead of confusing yourself and saying, well, why are the structures different? Shouldn't they be the same? Well, no, not necessarily. Okay, but the answer is it doesn't matter why. That's really the answer. It doesn't matter why, because the chart is going to guide you. Because remember what a chart is. A chart is a reflection of sentiment. A chart reflects people's buying and selling decisions. It's a reflection of irrational behavior. So gold against the euro, right? This is basically the irrational behavior relative to the euro, all right, rather than the dollar. And like I said, different factors will drive the euro. So we have to look at each chart independently, and that's the strength. That's one of the greatest strengths of technical analysis, is it allows you to trade a market or make decisions on a market without having to know all these fundamental differences Because, we can go crazy sitting here like, well, the euro economic this and the dollar economic that and FOMC this and that and all that other nonsense. And we're sitting there confusing ourselves when all the answers we need are on the chart, because what we're looking for on charts is price action, and we're looking to capture momentum. That's it. So if you just look at it from that perspective, a chart is nothing more than a record of people's irrational behavior. Then it simplifies the whole thing. So it doesn't matter if you're looking at gold against the euro. It doesn't matter if you're looking at gold against Bitcoin, because you're going to get levels that come up, right? That's the first thing, inflection points, trend and levels. So like right off this, I never look at this chart, okay? I'm not familiar with this chart at all against the euro, but I can tell you right here that there are some inflection points, okay, at these highs here, 1496, that leads me to the whole number, right? 1500 area, and I can draw a line there, right? From back here. And you would say, oh, but we know that, that's obvious because that's in place. Yeah, but if I didn't know that, if all I had was this information here, I still would have told you we have some sort of inflection point there, okay? Because it's a previous resistance. I could have told you that. And as the market goes forward, that level, if it's tested again, people are likely to behave a particular way there. All I'm doing is comparing previous behavior to the behavior of now. Everything is behavior, right? So again, there's another inflection point right here. All right, and that is the 1534 low. So 15.25 area. It's not going to be exact, but area. Okay, and look, price is beginning to hesitate there a bit. So, when we're calling trades, that we're basing it on what the price structure and the chart are telling us. And if you're interested in that type of trade, let's say you're interested in gold, we're calling XAU USD. And you're like, oh, but I have to buy it in terms of euros. I mean, that was actually kind of similar. I don't know if it goes to the exact day, but it was kind of similar in terms of I see the buy signal, I see the inside bar buy signal. I don't know if that equates to 1703 exactly, but that's where we were buying it at 1703, okay? And since then, it's just been pushing higher. But the key thing is look at each chart as an individual market. Don't worry about other markets or what they're connected to or this or that, because that's only going to lead you to confusion. Okay, does that make sense? And again, that's the whole point of technical analysis. It's to separate us from all those people that get all confused with fundamentals and trying to make this fundamental point and being right, and I'm an economist and all this other stuff. That's, the advantage that I have using charts is I can look at any chart and I can tell you what is likely to happen based on how people are behaving today relative to how they were behaving recently. Okay, it's like that. I mean, that's how it may sound simplistic, but that's what we're looking at. Is we're comparing behaviors. All right, so I hope that answers your question. That's a great question. Now, all right, so now Bella says here, XAU looks more bearish, right? And XAU EUR looks still in a bullish momentum. And I wonder how this is possible. Okay, again, so like I said, Bella, it is what it is. So, and this goes back to one important concept. And I'm actually going to I'm thinking about doing like a webinar or a video on these market essentials, where I'm going to be talking about these basic concepts on why technical analysis works. And why it is valid and why it's useful, because a lot of people think it's not. They think it's a joke. They think it's, it's just, whatever. But those are people that don't understand it or they're not using it properly. Technical analysis is a measuring tool. It's nothing more than that. It never promised to give us any kind of predictions or preciseness. It never made those promises. But there's one important aspect of technical analysis that people need to understand. Like I said, I'm going to make something more detailed on this, but price is a discounting mechanism. And what that means is price incorporates all known information in the world at the moment. This is the agreed upon price. So gold and euro, this is the agreed upon price. Right now, this thing's fooling around at 1538. All the known information in the world is baked into this thing right now. So whatever the smart money knows, whatever the herd is reacting to, it's all baked in. So I can get very important clues based on how the behavior changes for that reason. Okay, that's basically what that means. I know it may be hard to understand. So to simplify it, it's like it is what it is. Just accept it. Just accept that price is what it is. There's no need to compare it to other markets, if they don't make sense. And if something's really not making sense, like, you have to go back to the fact that everything is irrational. Like, for example, the dollar and gold should not rally at the same time, right? Like, gold is supposed to be inverse to the dollar. So if the dollar goes higher, gold should be going lower. The value of the dollar is going higher. But we've seen many, many occasions where gold is rallying and so is the dollar. And people that are all wrapped up with their fundamentals are like, how can this be? Gold can't rally with the dollar and blah, 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 and this and that. I better turn on, the news organization and see what's going on. But you just have to accept it for what it is, okay? It's irrational behavior, and if you're looking for momentum, it doesn't matter why. And that's what we're looking for. We're not making long-term investments in these things, not with these instruments. Long-term, you want to talk about physical. In fact, I think it was you, Bella, who asked about doing a webinar about gold investing and trading, and we're planning to do that this month. If I can get Andrew into the webinar. That's our plan. So we're going to talk about gold and metals, how to invest and how to trade. Ranging from physical to paper. Okay, so good question. And so Florent, Euro, 10 days. You see some clues. Right. So all right. Well, we looked at the Euro before. I know you came in. You probably missed that, but with the Euro here, again. You may see some clues with the Euro pulling back. Obviously, if the Euro is going lower, XAU against the Euro should be going higher because they're inverted, right? You have XAU, EUR. That's the symbol. If EUR is the base currency and EUR is, the cross currency, and EUR is going lower, then that means that gold is going higher against it, right? Because gold XAU is the base currency. That's how that relationship works. Right? So you can get some clues from that. But again, there's no reason to go over to have 10 different charts just to get a clue on momentum. You can get it from one chart and all the clues are there, like that XAU, EUR chart. We can work off of that. If that's the only chart that I had to work off of, I could work off of that. I may not have the same entry and exit points against the dollar, but at least, I'll be able to position myself and evaluate my risk properly. And that's all that matters. Okay. So great question. Great question, Bella. I hope I answered it. And I know I have these really long answers and the market just closed. Okay. Thanks, pal. All right. So I think, can you tell us, I got another question here. Can you tell us what you think about the ETFs to trade these metals? Okay. Well, that's a good question. And you look at silver. All right. Well, all right. So before I wrap this up, let me just see what I have some questions here. There wasn't a big jump in the Euro then. Right. So again, there's no reason to get caught up in all that, in all the confusion. If you find yourself getting confused, best thing to do is just simplify. And you can do that with one chart. Okay? One chart. You don't need to know news. You don't need to know anything else. Just one chart. Now, so question about silver. Since I have my Forex list here, I can show you silver real quick. Silver's going to follow gold, okay? Just not as dramatically. So silver's been all over the place, kind of like gold. Now, gold has been hesitating a bit, and look at silver. But the first thing that I see with silver, is I see a range consolidation. I see this right here, okay? I see that, and I see this. So, this again, as it fools around its range low, you get a reversal in this area, which would be like in the low 17s, followed by a pin bar or something. I would imagine gold would be reversing and going higher as well. And we have that potential inside bar on gold. So gold could, gold breaks out, you're going to see the breakout of this range. Just keep in mind, silver and gold, they do not trade in a one-to-one relationship, right? So gold has to lead, just like Bitcoin has to lead all those altcoins. So, and again, we don't like the silver CFD too much because of the size of the contract. Remember, we have to be mindful that we have people with accounts of an average size of maybe $3,000 or something like that, and you cannot trade multiple contracts of this thing with an account of that size because your risk will be too high. So we have to keep that in mind. Gold offers a much more comfortable position size, because the other thing about these metals, these CFDs, is it's nice if you can have multiple units, not just one, because that gives you flexibility, right? That's why we have 3 targets, and that offers more improved reward risk compared to one target. You know, if you have one target, it's much more difficult to achieve a reasonable reward risk. So that's the problem with silver. If you're in silver, great, just wait for gold to break out. Silver tends to be a better, at least we feel, tends to be a better instrument for physical, like coins or bars, stuff like that. And that's really what we want our webinar to be about. Okay, so let's take a look at, let's see, I had another question. Oh, the ETF question. So let me answer the ETF question and then we can wrap this up. So the question here is, can you tell us what you think about using ETFs to trade these metals? Now the ETFs, I know a very popular one, what is it? Is it GLD? Is this the ETF? Right, for gold? Now, people like to get into these because they figure it might be a good alternative. But here's what you have to watch out with these, and Andrew will agree with me. In fact, he's the one that basically told me. A lot of these ETFs, they fill them with garbage stocks, right? They put some good stocks in the group, because remember, an ETF is just basically you're getting involved in a group of stocks and you're buying them together as a group in the form of a stock, right? Like a fund. And they fill these with garbage stocks, just like USO, which is the oil ETF. And we had a lot of questions when oil was at its bottom at $10. We had a lot of questions about that oil ETF. And it turns out, and there was a great article that someone shared in our chat room, I think it was Reese that shared it, about all the garbage that they put inside the ETF, that it would be so hard for that ETF to make money in terms of what they're losing relative to what they're making, because of the garbage stocks that they have inside of them. So that's why these are usually not a good choice. There are usually better alternatives. Okay, I mean, look, the GLD ETF obviously has been following with gold, right? And you're consolidating sort of right now, just like gold. But if you can't trade the gold CFD, because I know we have a number of people that can't, there are stocks. You might as well find the best stocks in these ETFs and get into those. Like NEM, for example, which is was it Newmont Mining, NEM, or Barrick Gold is another one. Those are good alternatives if you can't trade the CFD, okay? And again, this price action, we can't put a lot of weight on the price action when gold is leading the way. Just like I don't put a lot of weight on the price action on Ethereum when Bitcoin is leading the way, right? So you get a little pullback here. Maybe you get a double bottom, which will offer a better price to buy this thing, right? The low is 52.33. We're fooling around here. What, 55.13 is the low there? Is that today's low? 55.13-ish? Whatever. So when gold turns, this thing will probably, out of nowhere, look, wow, look at all these bullish candles. But gold needs to break out. And until it does, you're probably going to just get a lot of noise in these. But the point is, you're better off finding high quality stocks than buying a ETF that's filled with a lot of garbage stocks. Okay, if that makes sense. All right, everyone, so that's the answer to that. Man, I've been talking an hour. I guess you people like to hear me talk because, man, I can talk a lot. So anyway, thank you all. I know it's Friday. Thank you all for taking the time to listen. If you have other questions, please make sure to share them in the chat room, and we'll be happy to follow up in there as well. If you're new to Greenbridge, please make sure to visit our website at greenbridgeinvesting.com. We have a couple of memberships there you can check out. We have a free chat room. You can check that out as well. Also, we're now taking payments in Bitcoin for those of you that, I know many of you are members, so it doesn't matter. But if you're new and you haven't gotten involved yet, we can accept, for our 6-month and yearly memberships, we are now accepting Bitcoin payments. So I just wanted to mention that as well. Keep in mind, we're going to have a webinar coming up soon. So for those of you that are registered, you obviously get the invite. I'm probably going to send it out next week on our gold webinar. Okay, that's, we're going to figure that one out. I don't know exactly when we're going to do that one yet, but you'll get the invite in your email. And we have that webinar library. So you can check out some of our recent webinars. If you're in our site, go to the webinar library and they're in there. Okay. Obviously members are going to be able to see more of them than non-members. All right, everyone. So that's pretty much it. Thank you again for watching. Again, like the channel and subscribe to the channel so you can get these notifications every time I do another market analysis. Have a great day, everyone, and thank you for watching.